You've had some discussion recently on the idea of, Argentinian 100-year bonds and long-dated issues coming from different governments. How do you think? I mean, if you're buying duration, why not buy those? What's your reaction to, should the Fed or should the Treasury issue much longer duration assets? Should we shift our maturity profile in that direction?
I think that would be asinine.
That is a very strong response. I love that.
I think long-dated bonds was the biggest cash handout, one of the biggest cash handout in the history of humanity, because you're giving away so much convexity and so much duration, and you actually, for some reason, the government has to pay money to give away. It's like you're given convexity and you're getting paid money to do so. So anything which is an incredibly good deal for investor is a terrible deal for the issuer. So if somebody gave me 50-year bonds, great, but that's a terrible deal for the issuer.
It's a great point, because you actually bring up who's on the other side of the trade.
Right. So
right? And so do I like trading against government officials? Do I like trading? Yes.
Yeah. Well,
relative to really successful traders, yeah, I'll take those guys.
Well, look at the government chart of old government securities, and you see bonds that are trading at like 140, 145 price. Now, when you see a long-dated bond trading in 145 actual price, what is it? It's a 30-year bond which was issued maybe like 10, 15 years ago, whenever, right? 20 years ago at like 7% coupon right now. What does it mean? The government got $100 million issuing this bond, paid 7% on it for 15 years, and right now has a $145 million liability. Yep. So if you just think the insane amount of money that the US government gave away by issuing 30-year bonds over the last 30, 40 years, why continue this madness?